people aren't very good at forecast that. Even though everyone knows about the halving, nobody figures about liquidity. So they kind of take current market conditions and say, well, if you remove the supply, everything will be fine. But what actually happens is because liquidity comes into the markets, demand starts exploding at the same time as supply. And it always takes everybody by surprise. Now, it's not a one-day event. It's not like suddenly you wake up on the 20th of April and Bitcoin's up, 50%. It tends to kind of chop around that period because people are like, well, it's in the price. And then before you know it, by June, Bitcoin's at 85, 95,000. And then you're off to the races. And then there's more demand comes in. Because remember, we talked before that as price goes up, as number go up, more people get involved and there's less supply. So it starts to get really reflexive. So it kind of gets really squeezy. And that goes on for a period of time, usually about a year and a half after the halving.
Many investors misunderstand the Bitcoin halving, overlooking its potential impact alongside the demand surge caused by Bitcoin ETFs. Raoul Pal, CEO and co-founder of Real Vision and a respected macroeconomic expert, forecasts that Bitcoin's price will reach around $85,000 in June, followed by a climb above $95,000 and potentially even higher as we progress through 2024. In his latest interview, Raoul emphasizes that Bitcoin adoption is still in its infancy, anticipating significant growth after the halving at the end of April. He believes that many investors are underestimating the combined effects of the upcoming halving and increased demand from Bitcoin ETFs. This halving is poised to be the most significant in Bitcoin's history. During the 2020 halving, the new Bitcoin supply per day was reduced from 1,800 to 900, with Bitcoin priced at $7,000 per coin. In contrast, the 2024 halving will reduce the supply from 900 to 450 new Bitcoin per day, with each Bitcoin priced at $70,000. This represents a supply reduction of over $32 million per day, making the 2024 halving 3 times more impactful in US dollar terms. However, Raoul emphasizes that these price movements won't occur overnight. Stay tuned to the end of the video where Raoul breaks down his comprehensive crypto market outlook and shares his insights on the upcoming halving.
Ever feel like you're wasting your money on things that don't really matter? Stop. You don't have time. Don't miss out on this 2025 bull run. Educate yourself now. Don't spend $12.50 on junk. Educate yourself on how to be successful in crypto using our crypto cheat guide. Unlock the secrets of crypto and make smarter investments today. Visit the website now on the link in the description for your exclusive copy. Start your journey to crypto success today.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
Because Bitcoin is basically a share of a network, the more people who join the network, the more value goes up. So as the ETF brings people in, as people start fearing the governments and their deficits, they start looking for different solutions. One of the reasons gold has been rallying is the same. So what we're seeing is this was the most successful launch of any ETF in all history, which tells you it's not just an ETF. It's the idea of Bitcoin itself is resonating with people. They kind of know they're getting screwed somewhere by the system, and this feels like a way of getting higher returns with more volatility, but it kind of saves them from what is going on. So let's assume that this is the largest ETF launch in history, and a lot of newbies have come in. Well, it's happening at a magic time. The magic time is what's known as the Bitcoin halving. So new Bitcoin comes onto the market via miners, Bitcoin miners, who undergo huge kind of mathematical calculations to produce a Bitcoin. There is a fixed number of Bitcoins that can be produced each year, so it's a competition to produce them. So you need a lot of computing power. And then every 4 years, the algorithm, Bitcoin itself, halves the number. So if there were 100 Bitcoin being produced by miners every day, whatever the number is, right now, after April 20th, it goes to 50. So there's more people coming into the market, which is new demand, and new supply is shrinking. So all the time, the only supply is really sellers of Bitcoin who hold Bitcoin right now. But Bitcoin's one of these weird assets where 80% of all holders just hoard it. Like you and I, we just don't do anything with it, we just hold it. And so there's really only 20% that's available for trading. So listen, what's going on is the same story that's been on for a while. We are in the crypto macro spring to summer transition. That is when liquidity starts coming into the system. It happens to correspond with the US election cycle, because obviously politicians can't help but give out candy around election time. Also the Bitcoin halving time. So Bitcoin halving, reduces the supply, and then there was the ETF. So basically, we've got a perfect setup of liquidity plus new demand plus reduced supply. There's bear markets in all assets, and this is just an asset. And it's a very reflexive asset, so it tends to over-exaggerate the moves. There is a good question within that, is the severity of the downside markets, that in Bitcoin were classically 80%-ish. Last one was 65, so it's less than others. Is that changed because of the ETF? Well, obviously, many of the ETF holders, faced with their first round of volatility in the space, will panic out, much like everybody else, but that's fine. But I think there's going to be a bunch of the millennial cohort who are going to put it in their 401k, and that's every 2-week buying regardless. So my guess is that it'll dampen the volatility to the downside. So next time around, it won't be down 85, it won't be down 75, it won't be down 65, but maybe it's down 45, 50. I mean, I continue to be very bullish this year and very bullish for most of next year. And people aren't very good at forecasting that. Even though everyone knows about the halving, nobody figures about liquidity. So they kind of take current market conditions and say, well, if you remove the supply, everything will be fine. But what actually happens is because liquidity comes into the markets, demand starts exploding at the same time as supply. And it always takes everybody by surprise. Now, it's not a one-day event. It's not like suddenly you wake up on the 20th of April and Bitcoin's up, 50%. It tends to kind of chop around that period because people are like, well, it's in the price. And then before you know it, by June, Bitcoin's at 85, 95,000, something like that. And then you're off to the races, and then there's more demand comes in, because remember we talked before that as price goes up, as number go up, more people get involved, and there's less supply, so it starts to get really reflexive. So it kind of gets really squeezy, and that goes on for a period of time, usually about a year and a half after the halving. Every single asset on Earth versus Bitcoin since 2012 is down 99.9%. None of us expected $10 billion of demand in 6 weeks, or whatever stupid number it was, right? We kind of thought it might do it in a year, because that's what gold did. GLD in its first year, but it did it in record short amount of time, and it doesn't seem to be slowing down. So no, it wasn't priced in. We didn't realize how many ordinary people, RAAs and investors, are starting to realize this issue that you're talking about is I need something to protect my wealth into the future, and maybe make me money, not just protect my savings, but I want to make some money too. And this does that. As it says, if you hold Bitcoin over a few years, you can buy something like 5 times as much S&P 500 just in a few years. So your purchasing power is going up dramatically every year you own it. And that even takes into account the fact that it goes down every 4 years a significant amount. Over the long run, it doesn't really matter. Think of why most people have bought gold. It's to protect themselves from the action of central banks. It has proven itself over several thousand years to be a way of having a store of value. Bitcoin is that for a digital age. Okay, most people know that story. They don't understand the other side of the story, is why does nobody feel as wealthy as they thought they should be? Particularly if you're a bit older, you're like, why are my savings not as much as I thought they would be, or I can't afford as much? Right, that's the big conundrum. And the fact is that particularly since 2008, when we broke the world because of debt, we have been using the printing of money to try to paper over the cracks, because economic growth from an aging population is slower. We don't have much productivity because people are retiring, and we've got too much debt, so people have to service the debt. So the central banks have been doing a bit of magic, which is printing of money. At one point it was called quantitative easing. Now they don't do that as much anymore because everyone knows that game, because that's the money printer go burr. So what they do is they inject liquidity into the system, whether through all these weird things you hear about, like reverse repo markets, stuff like that. Basically, it's to hide the printing of money, put it into the system. When you look at that on a globalized level, because everybody's doing it, you're debasing the level of fiat currency. And what that means is your dollar today buys you less assets tomorrow. Now, why do we buy assets? We buy assets to save money for future consumption. So if I were to buy gold today, it's because I want to release it in future and I want its purchasing power protected for it to go up. Now, when you look at what's happening with the debasement of currency, they're debasing currency by about 8% on year on average amongst all the global central banks. Add in about 3 to 4% global inflation, you have 12% hurdle rate on your assets before you actually make any money. So your savings, you need to be making 12%. Now, since 2012, the S&P 500 has made 12% annualized. The NASDAQ has made about 24% annualized. So tech stocks have helped. But crypto is the one that really offsets this and allows you to generate a lot of wealth. So if you're in your 50s like me, or your 60s, and you're thinking, I just don't know if my retirement savings are enough, then a small allocation to an asset that does 150% a year will compound massively and will help you in having purchasing power in your retirement, because nobody wants to be broke when they're 85 years old. That's everybody's big.
So here's Raoul Pal discussing why many investors have misconceptions about the Bitcoin halving. With the introduction of Bitcoin ETFs, demand for Bitcoin has surged to unprecedented levels, and this trend is likely to continue over time. With the halving approaching, the combination of decreased supply and increased demand is expected to propel Bitcoin's price in one direction, upward. Moreover, Bitcoin serves as a hedge against economic challenges, making it an attractive option for investors looking to preserve and grow their wealth amid uncertain economic conditions and rising inflation. Raoul believes the evidence is clear, but he welcomes your thoughts and opinions on the matter. Feel free to share your comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.